Hey traders, this is Off the Floor Trader. I just wanted to bring a video this evening to you all. In lieu of writing a book on every chart, there's been a lot of questions directed my way about trades and entries, exits, all that kind of stuff, and then also some of the stuff that happened last week. So I'm going to try to cover a couple of those things in this video. So I hope it helps you. If you have any questions, just leave any posts down below all the charts, and then I'll try to get to them as quick as possible. Last week was really interesting. We had some movement in some markets, and we had nothing going on pretty much in the indices. If you look at the ETF, the spiders here, you're going to find that what was most interesting here is we had 5 straight days of closes within 1 point of each other. That is unique into itself, but more importantly, when we had inverse markets that were making big moves, the spiders, the Qs, and stuff like that really weren't moving at all. Yeah, we've gone 12%. Up to this level, 12% up in 4 weeks. That's an amazing move for new traders, guys that are not versed in the markets. This is phenomenal. We've been trading for multiple years, of more than 15, and man, we've never seen something like this. I mean, we've seen V bottoms obviously recently, but this is a big move here. Gap, 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 gap. I mean, eventually we'll fill these gaps. We don't know when, but eventually we will. Is it unheard of if we turned over and had a nice 10% correction from here? Yeah, that wouldn't be unnormal, but again, going 12% and then going down 15%, that would mean that we have a lot of indecision in here, and that again, people who are trying to get long would be getting hurt in here. So be very careful in here. We are very cautious. This consolidation says more upside, and the path of least resistance is to the upside. However, we are not comfortable buying in this area. That's not our trade setups. We like to have a little bit more of a pullback. Now, with that being said, I want to talk about a question that came in about setups. Listen, in the markets, if you're going to be successful, you don't need a lot of setups. You need about 2 or 3 good setups, and what you definitely don't need is an ego, and you don't need to be right. If you're trying to be right, you will lose money, I promise you. It's easier just to write a check to charity or give it to your spouse to go spend at the store or whatever they want to do with it, because it'll be less painful. Markets are about understanding what you're trying to do and your trade you're trying to do, and executing that trade on a regular basis consistently, by your rules and how you lay them out. But more importantly, it's about how that you control yourself and your emotions during the trade as well. Whether your time, you have to determine your time frames. Are you longer term, shorter term, et cetera, et cetera. No two traders are alike when it comes to that, even if they have the same setups. So don't try to have every setup in the book. When you're going through charts and you're looking on a great site like this, don't try to copy everybody's information. Ask questions: why they do that, how do they do that, why did they choose to do that. That would help you out when you're developing your trade plan, and everybody does need a trade plan. So for us, this is not comfortable. For some people who want to buy in here to go up, that's comfortable for them. That's not our trade plan, so we will stay away from this. All right, let's go look at gold real quick. All right, gold had a nice move on Friday, had a reversal candle. And again, new traders, pay attention here. Go to larger time frames. Let's look. We usually start at a weekly chart in the mornings and take a look at things that are happening. We've got 1, 2, 3 bottoms on gold here. Typically, the third time down, it's going to break, and if not, it's going to be a shallow bounce by break. We saw that it wasn't going to break. We don't usually take breakouts directly. We wait for smaller time frames, either get involved before the break or shortly after the break on a small pullback with a defined risk. In this case, it did bounce. We were looking for a chance to get short after we ended up breaking this little channel, which is not drawn here, and we were able to get short. The only mistake we made, and you will still make mistakes after trading the markets for a while, is we didn't hang on to this long enough. Once this candle broke down and had a major move, we covered the position, thinking we would get some pullback, but this was much weaker than we anticipated. It did consolidate, and of course, on Friday we did break out. We did come back to the breakdown region. Now it's decision time. What's going to happen? We suspect this will poke its head above here, possibly consolidate for a while before rolling back over. We do not think gold is done yet. That doesn't mean that's what we're predicting. However, we just don't think it's done yet. We're not involved in this trade, and we will wait until we see some further movement and some consolidation before we start looking at a short position. When we do get short, we will be looking for a move down to the 1100 range on that. So if you are long, congratulations. I would try to protect some of this since the weakness is still to the downside. Let's move on and take up the euro. Euro is sort of a snapshot of what happened in gold. One thing I will say about the euro, we posted a lot of charts about this when this trade was setting up. This is one of our favorite trade setups. And once we get a move in the euro, you'll typically get some type of consolidations. In this case, it was a nice bear flag. Bear flags do resolve themselves typically to the downside, which we were looking for. Once it's broken, pulled back a little bit, which is just right into our wheelhouse, we were able to get involved in this. It went down and hit our first target. And of course, now it's bounced, consolidated, and actually broke out on Friday just like crude. Had a reversal candle. We will typically get out on a reversal candle for the full amount, but on this one we still like down below here at our second target, so we're hanging on to one. Our stops are in. It's a risk-free trade, so we'll let the market tell us what's going to happen on this one. So again, nice breakout. If you were long into this breakout, there was a chance to get long on some short-term stuff. Congratulations. Protect that profit you have on here, because most bounces on a weak market is short-lived. And then lastly, let's go in and take a look at crude oil real quick. Crude oil, same thing. Doesn't have quite the same pattern as the euro and gold, but listen, oil's weak right now. There's a lot of speculation on why oil is weak. We won't get into speculation. We don't speculate on news. We don't speculate on what the talking heads are doing. We actually look at what price has done and where it's going to go, and what volumes involved. We look at internals and other things that help us determine where the best places to be involved in the market and place our capital at risk. And of course, the main thing is to actually is to control that risk as well. So we can see here we did break down, and let's start with a weekly chart. And again, going back to you guys that are new into trading, I always want to start with a weekly chart and look at where price has come from and where it could go from this point. And you can see here, back in April of 2011, we were consolidating pretty tight. We had three bottoms, 1, 2, and this is technically a third. We broke this channel here, which gave you a beautiful sell signal. This is sell signal number 1. It consolidated and it broke down again. There's sell signal number 2. And of course, from sell signal number 2, you could have gotten a nice move down from there. So you had a couple of opportunities to get short into this market here. We were short a couple times in here, and we rode a nice wave down into this area here. But now we're at the bottom. If you missed all of this, do not try to short down here. That's a sucker's game. They did reverse hard on Friday, and anybody who was weak and stuck short was jumping out, and that's why the move was a fairly good sized move. That was a nice move there. Now, we were back into that last breakdown area, similar to what we had in crude, and now it's sort of decision time. This is not, in our book, a trade where we would actually start to go long in here. We think that crude will come up and probably test this area up in here, this 76 area, 77 area, and then roll down. We hope that it takes out another low. Why? Because if it does take out that low, as we showed on the weekly chart, then we have a lot of buying down in these candles from back in 2007, or excuse me, 2010. I apologize. So anywhere from probably the 70 range down into that 67 range. There's a $3 range in there where price could come explore down there before it starts to find some buyers down there. That would be an area that we would definitely be interested in watching for any type of bottoming type of structure. But for now, right now, any bounces for us is a shortable event. However, we expect the bounces to be a little larger than what they have. So it wouldn't surprise me to see this move up into this trend line before trying to find some sellers up in that area as well. So be careful with crude. I'm going to give you a warning about crude oil. Crude oil is one of those markets. It's a great market to trade, and you can make ample money in this market. But if you don't manage the risk very well in crude, we call it the account killer. It can definitely kill your account pretty quickly. And we don't want to see anybody that happen to anybody. It's not necessary. We want to see you get into crude and really get some nice trades on. As you can see here, there was plenty of opportunity to make some good trades. So with that, next week, guys, just watch the indices carefully. We suspect they will probably move one way or the other, and then any other markets you want to see, just leave posts in there. We'll go ahead and try to post some other markets. We watch all markets. We trade most all the commodities and future markets. We just post really just the big ones here in the site, and hopefully it helps you guys. Otherwise, I wish everybody the best next week and good trading.